Okay, so we're going to look at the pairs that are currently on our watch list for the second week of June. And following the progressive news about the peace deal and the tweets of Trump regarding the ceasefire as well as the reopening of the Strait of Hormuz, we are now looking at a more risk on the Forex market, with its focus now on moving money out from these safe haven assets such as oil, such as the dollar, and more into the risk on currencies such as the New Zealand dollar and the Australian dollar and some indices and stocks. And so that'll be our focus for now, but of course we'll be looking at the developments in the news in this coming week. First of all, it's Euro NZD, and we see here on the daily time frame that the Euro NZD was making these impulse legs down. We can see that it's very consistent in making that bearish channel and continuing that bearish channel over the past few months. And so we're looking for a continuation of that, especially that it bounced off of that upper trend line here, reacting also from this psychological resistance that was situated over here with all these highs here. There was a range that was being formed here in just one candle. On Thursday, we see that price went up and liquidated all those range highs and made its way down, and once again obeying that upper trend line. And so we're seeing some more movement at the downside and really breaking that previous fractal low. However, it has been wicking that for the past few days, and so we're looking for more of a decisive break of that as well as a retest. And after that, we would be looking for shorts from that position, targeting these areas of liquidity over here below at 0.5 fib in discount pricing. Next, we're looking at NZD USD, and so we're once again, this is in line with the risk on sentiment, with the US dollar weakening and the New Zealand dollar increasing in value, with money coming out of the US dollar and flowing into those risk on currencies. But again, we'll have to see. I'd need a more decisive move here for NU. However, if we look at the daily time frame, we'll see as well that bullish order flow with that impulse leg up. And we're now going to be situated where liquidity is right over here. There was also a fair value gap there in the daily time frame, but in the 4-hour we can see it as well as that last ascending low, if you will. And so we're seeing that there was that external liquidation, that internal liquidation with after that fake out that happened over here with that move up, targeting those early buyers that wanted to buy, and so they got liquidated here with that internal liquidation. And so we see that change of character as well. And so this is actually very ripe in my opinion. However, I'll be looking for that retest for some more manipulation going down, and change of character probably in the 1-hour time frame. We'll get in once that closes another fractal high. We'll be looking for that long over here and just target just a generous amount, and probably target these highs, just see what happens. Nothing too ambitious, as once again, until June 19, everything else is just perception. We're not sure if the deal will actually push through and be signed in Geneva on June 19. All we know is that the perceived risk is now risk on. Next, we're looking at AUD USD for the exact same reasons as NU, but would need once again a more decisive move up and then a retest down, as well as that change of character on the downside, which will give us our technical entry to go up and probably target these descending highs straight over here. But we'll see. We'll also judge which one, which is NU or AU, which would be more risk-free in my opinion. But I think that the structure in AU would be more feasible for a continuation for that next impulse leg up. We're also looking at some indices and stocks such as the FTSE or UK 100. We've seen that fractal break, beautiful clean V-shaped reversal after that external liquidation that it snagged over there at discount pricing. If we draw a Fibonacci retracement from swing low to swing high, we see that price was actually below that when it reacted to that liquidity, and as well as that those early buyers that were tapped out over here and with that internal liquidation following a change of character that broke market structure with that marker over there, and so it created that V-shaped reversal to the upside. and waiting for it to create a new impulse leg up, in my opinion. So we're looking to get in on the retracement and scale in once it targets that major area of liquidity on the 4-hour time frame, and then change character there in the lower time frame, and we'll probably get our entry there for a good risk to reward. And we're also looking at a GBP AUD because of the risk on perception right now, but of course we'd have to look into those very key data releases this week for the pound, and how they react to the rising inflations that are currently still present in their country. However, technically speaking, we'll be looking at some longs because of, in the weekly time frame, we're seeing that reaction to that liquidity. First of all, we got that external liquidation and also that internal liquidation that took out those early buyers situated over here. And we're seeing that change of character on the daily time frame, making those consistent impulse legs up. And so we're looking for scale in the 4-hour time frame, targeting those areas of liquidity in discount pricing. If we draw a Fibonacci retracement from swing low to swing high, we see that it is definitely in discount pricing. And so we're looking for price to go down there and change character in the lower time frame and get in and target good risk to reward. Same goes for GBP CAD. However, for GBP CAD, we're looking more at the weakness of the CAD because of the weakness of the oil. Oil is now going down because of the perceived risk on, as well as the reopening of the Strait of Hormuz. And so we're looking for more further upside on this. We're looking for some further retracement back into some liquidity on discount pricing over here and over here. Reaction from that, change character in the 1-hour time frame, and then go up, continue to go up, and continue making those higher highs and higher lows until it targets these descending highs situated over here, and probably just break that because on the daily time frame there are still some descending highs that have not yet been touched. So we're also looking at NZD CAD for the same reason why we're looking at GBP CAD. So we have a combined risk on plus that weakness of the oil, and seen and reflected in the Canadian dollar. And so we're looking for a decisive break of that previous fractal high in the daily time frame. Looking for a decisive break probably today or in the next few days. After that, a liquidation, retracement, and then continue making that impulse leg higher into the upside for NZD CAD. And finally, we're also looking at UJ, holding this position for a few weeks now, and we've seen that change of character, or that very big engulfing bearish candle in the daily time frame. In the 4-hour time frame, we're also seeing that change of character when it broke that fractal low over here, and so we're looking for price to sort of react to that area of supply and go down, and we're waiting for that BOJ rate decision coming this Wednesday, which will be a key component to why we are shorting this. However, if the decision on Wednesday would be more of a dovish approach where they would not increase their interest rates, then we'd probably get out of this position, as we've been holding this for too long. If an intervention comes, then much better. But because of the weakness now of the US dollar, I suspect, and in my opinion, that the intervention will still probably take place, but not to the same degree as if the war continued and made those higher highs and higher lows, probably go to the 161 price, and then have that historic bearish dump. But that's not in the cards as of now, as we're looking for more peace, and we're seeing and observing more peace that's happening right now in the markets, and that depreciation of the US dollar. And so we'll be looking for a conservative short there, targeting that 157 price just above the yearly open. So that's it that we're looking for this week. We'll see how price develops.